Welcome to the Investing Chartered Accountant, and this month will be a full review of my portfolio on Trading 212. This is not investment advice. Please do your own research. This is just my portfolio and what I'm doing with it and how I think it's going to move over this year. This portfolio was opened in June 2025, so this is only month 8 now. So it's growing pretty well. I'm pretty happy with things, though like anyone, I've made some mistakes on individual stocks which I'll need to learn by. But let's just walk you through the portfolio. First one up, HSBC. Small position, I don't really add it. So I've got 35 investments which need to come down to about 30. So HSBC is too small to worry about. Next up is Alphabet, once again too small to worry about, but these are good numbers, almost 30%. This is 36%, so I'm just going to leave them to run. Barclays, another one too small to worry about, also a very good position. If I only had 100 of these at 30% improvement, and you know, from when I bought them, it'd be amazing. Legal & General is the next one up. As you can see, it's pretty stable. This graph here looks more erratic than it is, but you know, it's between 268 and 256 within 10 pence, so it's pretty stable stock. Like to buy more of it. It's just, you know, it's got to drop much more down to where I need it to be to buy any more. Lloyd's, always going to get Lloyd's. It was anyone who's got in before it hit £1, good on you. It's always going to go over £1. Very strong stock, very stable dividends. Very happy with Lloyd's. Love to grow it, but probably not at these prices. Just got into the dividend of Invesco, so the distributing one. You'll see that I've got the accumulating one, which is higher up, but I just bought this, as you can see, below when it went below £6, which is where I wanted to get in at. So I've got in, I'm happy. We'll grow it if it falls below the £6, and so this one will definitely start going up the list. Got into Sainsbury's, as you can see, I've got in pretty well there. Will add if it goes below to around 305, but you can see it's up to 320 now. Might not get down as low as that again for a bit, but if it does, I'm more than happy to double my position in Sainsbury's. Next up, Greggs. Now, I've done lots of videos on Greggs, so I recommend you checking them out rather than me going through everything I think about Greggs here. But disappointing falls in Greggs over the last month. You know, that was a decent price, so I was up a decent amount. I have trimmed. Once upon a time, I think I had 60, 70 shares. I'm down to 10. And must admit, Greggs is one where I might sell out entirely if it gets back up to this level. But to be honest, if it drops further, I might buy even more. Games Workshop is one I've just bought. So you can see I've got in here. I think if it goes towards £165 per share, I'll probably buy. So I'm just waiting to see what happens with Games Workshop. Amazon, quite happy to hold Amazon, not looking to sell. Same with BP, quite happy to hold if it gets back down to the levels I bought in at, which is around 415 or anything below 420. Happy to buy more, though I'm quite happy if BP keeps growing. Tate & Lyle is one where I might sell. So, you know, I've pretty much got in around here. I'm not sure. I've added to it this year. I'm not sure if it's really core to my investment strategy. It does pay a decent dividend, so it's one that I might sell out of in full. Shell I've bought in this year as well in 2026. So you can see I got in around here. Didn't buy any more just in case it went down. I'd still prefer my position to fall to about here, so I'd average down. But it's gone up, so that's not bad, but I think it will come back down. Hikma Pharmaceuticals I bought in for diversification. I'm not sure whether that was a good move for diversification. As you can see, it sort of fluctuates between the 1,500 and 1,000 sorry, £15 and 10 pence, all the way up to 15.90. I'm going to hold on for the moment for the dividends, but that one that might get the cut. So I'm looking to cut 5 to get it all down to 30 investments. So that's another one that might get axed. Imperial Brands I've added 2 this year, and if it was once again to get down to these levels as it has done over the last month, I will look to buy some more. But at the moment, comfortable to hold. It's a good dividend stock. I'm more than happy to add to it. Tesco, I'm below the average here, so I might add. I think if it goes to about 410, I will add. But once again, Tesco, good defensive stock, happy to hold. Land Securities, I love. I got in. You have to go all the way back. I got in around this time. So you can see it's grown. I've taken a dividend. Good position for Land Securities, happy to hold. IG Group, also very happy to hold. Can see I'm 25% up. Going to get a dividend as well, which is where you can see the dip coming through here because it's gone ex-dividend. So I'm happy with that. M&S, if I can get that right, I'm just above. I think if it gets to about 380, then I will sell. Bunzl, once again for diversification, it's way below the price I bought it at, which is over here. So I'll hold. I've taken one dividend already. I'll see how it goes this year, but this is one that may well get an axe at some point during the year if it goes back up to the price I bought it in at. If you are a PayPal holder, you'll know the phrase pain pal. It's a falling knife. I have averaged down. I bought another 4 shares earlier in the month. It just keeps falling and falling. So until it stabilizes, I'm not going to put in any more cash. I'm just going to hold fire. I would like to take the average down, but once again, this one could well be for the axe. It's a good company. The stock market doesn't like it, and so all I'm showing is a very unhealthy loss, unrealized loss as it stands. Talking about things that haven't gone well, Hilton Food, what was I doing? It's just a really, really terrible buy. I still think it'll come back. I think I'll be holding the bags on this one for a good couple of years, and it's a lesson. Holding individual stocks is a risk, and maybe the quality checking needs to be much better from my side. So you can see £107 down. It's a real horror. Greencoat, also one I was thinking about adding to take my average down. You can see my average is around there, above £1. I worry a little bit about Greencoat. It's a good dividend. I'm happy to hold it, but it's one I need to keep a close eye on. I don't know how strong the balance sheet is to keep paying those dividends, so I've got some concerns over that. So it's one I will be watching. Sophie, what is going on with the market with Sophie? Now, the whole market moved against tech companies on Friday the 30th. Sophie produced just brilliant set of results, and the market punished them for it. You can say I did have a good average. That doesn't look so wise when it's down to 22.77. I'll need to look at it early next week. I'm more than happy to increase my take. I think this is a short-term position. I'm more than happy to hold Sophie. I think it'll come back with those set of numbers it's produced. I think it'll go from strength to strength, and I'm happy to hold. Pets at Home, I've got a good average here. I did buy an additional 50 shares to take the average down, and when it went up here, you can see towards the £2.12, I sold the 50, so I made a bit of profit. I trimmed it, made a bit of profit, and took my average down, which is how you really want it. It's a great thing to happen. Meta, once again, great results. So once again, it came back. I haven't seen a lot of pain in Meta. It's come back. The issue that we have here in the UK is if I just click and take you down to here, the foreign exchange on all US stocks is really painful one to soak up at the moment with the weak dollar due to everything that's going on within the American market. So I've got a good gain from unrealized gain due to the stock market moving back up. But the foreign exchange, you know, when you've got to do more than 4% in your capital rise, it becomes a tough ask. Next up, Taylor Wimpey, good position. Just below the £1 mark. I'm more than happy with Taylor Wimpey. This is going to be a long-term hold for me. Vanguard first, another one of the ETFs. This is distributing one. More than happy to hold Vanguard. 13% up. Very happy with that. And the Invesco cumulative version, 16% up. Happy with these positions. Royalty income, you know, that's good. It's monthly dividend payer. I'm happy with it. Once again, I could have made even better if it wasn't for that horrible foreign exchange position there. I'm going up now to Aviva. I had a bit of a rough month as insurance stock. You can see it's come off from 680 all the way down to below 620. So it's taken a bit of fall. It's coming back. I'm more than happy to hold Aviva. Very strong stock, good dividend payer. Very happy to hold, despite the short-term wobbles in the share price. Visa's just had an awful time because of the Trump threats on capping the rate of interest being charged. It sent it down. You know, you can see there I'm almost £50 down, and that is a combination really of the unrealized loss because of all the problems and market signals that Trump has been putting out, and obviously the foreign exchange hasn't exactly helped either. Visa's a great stock. Please, you know, do your own research, but it's a solid stock. I don't know whether I'll continue to hold it because I've got S&P exposure and all world exposure, so it's what I'm thinking about if it was to go up, which I'm sure it will, selling, but I'll probably hold for at least the first quarter this year. And when I say I've got S&P exposure, there it is. There's my ETF, pretty much break even as it stands. That's where I'm at. You know, probably should have bought even more into here, but I'm quite happy to hold. I'm quite happy to add to my position. Happy with that position. Admiral, like a lot of insurance companies, just took a real battering, especially since the analysts came out and, you know, there was a sell and there was a change to the projection saying it should be about £30 per share. It took it well down. Look at that, from the heights at the start of the month at £31, almost £32, down to pushing just above 26. It's coming back. I'd expect that to come back up. So I'm quite happy to hold Admiral. I went in, as you can see here, probably could have timed it a little bit better, but I'm quite happy to go in here. I think it'll come around. Happy with my position. Once again, good dividend payer. More than happy to hold. And my last position is in Unilever. You know, Unilever's a good dividend stock, good defensive stock. Went below 46, which is far too cheap for Unilever. You can see it's climbed ever since. I'm very happy with my position. I've trimmed it as well. So I added about 20 odd shares. And as you can see there, I sold 6 to take it back down. So that's where that is. For cash, I've got just above 2,700 just to take advantage of any fall in the stock market. So I'll hold a fire to that. And that leaves my overall balance at just below 17,000. The investment is 16,500. So as you can see, as it stands, I've got a 5.8 return, just over £400. It's stable, really going for the dividends. That's my strategy. It's a 5-year strategy. Just build up, expecting some capital growth, but mostly just getting the dividends and trying to get it to a position where the snowball effect will work. I think my aspiration is to get anywhere between 75,000 to 100 to help out for when I retire. So it's a 5-year plan, on track. I hope you found this useful. Please do your own research before buying any shares. And until next time, happy investing. Hope to catch you in the near future.